Dcryptofan. Oh, we have a game changer clip. Today you're going to hear from CEO Larry Fink of BlackRock. You heard it right, BlackRock. He's going to be talking about how traditional financing is going to be shifting to tokenization. And he's going to talk about ETFs, how they affected Bitcoin and Ethereum, how it affected BlackRock, and how much this make them a lot of money. All right, so in this clip, you're going to hear how real-world assets come into the blockchain technology. All right, you don't want to miss this one. All right, if you just tuned in, it's the Crypto Fan. Make sure you leave a message, leave a comment. Let me know what you think about this clip. Make sure you hit a like and subscribe if you're down with this crypto army. Let's get into this.
Larry, good to have you here.
Hello,
Thank you for being here.
Carl, David.
And Jim will probably ask some questions as well, no doubt about that. I guess, it seems as though things are working on all fronts for you. Is this as good as it can get, Larry?
Well, it is gratifying. I mean, what really identified us in the third quarter, the breadth of where we grew. It wasn't just one business area. It was from cash to our systematic equity, our AI-based equity team that grew $30 billion over the course of the year, $10 billion in the quarter. Crypto, our digital asset platform, our private markets platform, our investment technology grew as fast as they have in many, many quarters now. And then, just across the board, ETFs, record quarter. So it was not just one product area. It was not just one region. It was a completeness. And I think it comes down to the whole portfolio, the entirety of a conversation. When we bought BGI in 2009, no one thought you could marry passive and active. Well, not only we did that, we've transformed how a portfolio is being engaged. And now with passive, active, publics, privates, and then we overlay investment technology, and now digital, we're the firm that more and more people are going to worldwide.
What do you mean by digital?
I do believe we're just at the beginning of the tokenization of all assets, from real estate to equities to bonds across the board.
It's very loud here.
It is very loud.
But it's good. Capital's at work, Larry. You like that.
I love capital at work. Yeah. But there's $4.1 trillion of money in sitting globally in digital wallets. A lot of that money is outside the United States. If we could tokenize a ETF, digitize that ETF, we could have investors who are just beginning to, invest in markets through, let's say, crypto. They're investing in it, but now we could get them into the more traditional long-term retirement products. So we look at that as the next wave of opportunity for BlackRock over the next tens of years, as we start moving away from traditional financial assets by repotting them in a digital manner, and then having people stay in that digital ecosystem. Mm-hmm. They can have their cash, and we have the largest cash money market fund that's tokenized called BITL. Our Bitcoin IBIT is now over $100 billion.
$100 billion, I know, from nothing not that long ago.
And 2 years ago, zero.
Yeah,
so
I know. Well, you weren't always a huge proponent of crypto, as we know. You love it now.
But I grow and learn.
I heard you say that on 60 Minutes.
I did say that.
Jim?
Yeah, Larry, I wrote How to Make Money in Any Market. A lot because of our talks. Yes, a lot because of what you did. And I dedicate a lot of it to you because I say that people don't know how to invest. People feel that their parents are going to be richer than they ever were. Do you feel that your offerings, if people were to embrace them and work at a company that had this, we could kind of change this world where younger people will spend more money on polymarket betting about whether on some political event, when if they go with what you have, they might be able to, through savings, be better, be wealthier than their parents.
So a great statistic, if you put money to work on January 1st, 2000, and a year later, you had the dot-com crisis. 6-7 years later, you had the financial crisis. You had the COVID crisis. You still would have made 8% compounded over that entire 25 years versus earning 1%. It is so compelling to be in the market, and this is the story. It's not about if our market's going up or down. Is there a bubble in crypto, or is there a bubble in technology? It's about being in the market throughout the cycle. Even if you put money in the United States in the year 1900, and then you had the Great Recession, you had the Depression, you had all these things, you would have earned over 9% over 125 years. So I'm not here to tell anybody if the markets are going to go up or down, but over a long horizon, and every individual who's thinking about it should be focusing on these opportunities. And I'm absolutely thrilled to see more and more young people investing in equities, not just Polycom. They're investing in equities. And if they can now translate that from just a trading and flipping account into a long-term investment strategy, and be an owner of those over long horizons, over your lifetime, you're going to do really well. And another interesting point, I think I've said this before, but over a 30-year cycle, if you earned an extra 0.5%, over 30 years, 0.5%, your retirement pool of money is up 15% more. Just 0.5%. So the virtue of compounding over 30 years, there's nothing more important. And Jim, you write about this all the time. This is what it takes. It's about being in the market, being focused on this over a long horizon. And the young people who are worried, they're not going to have much to worry about. America still is the best place in the world to invest, and I would be continuing to invest here today.